Hello, this is Alex from ONG Tax and Accounting Services. So in this video, we're going to talk about what happens when a foreigner, a non-citizen or a non-resident alien purchases stocks of an S corporation or becomes an owner of an S corporation. To start off, let me throw a word of caution out there that this video is for educational purposes only. It is not meant to be a legal or tax advice, and if at any point in time you need a legal or tax advice, you should always consult with a competent tax attorney, a CPA, or an enrolled agent who can be able to listen to your situation and help you out. It is also important that you understand what S corporations are, because many people do not understand what the difference between a C corporation and S corporation is. Now, an S corporation are corporations, okay? They are like a C corporations that have elected to pass corporate income losses, deductions, and credit to their shareholders, okay? So instead of the C corporation paying taxes on the corporate level, it elects to be treated as an S corporation. So once it elects to be treated as an S-Corp, it becomes a pass-through entity and it passes off the income to the shareholders. Okay, so the shareholders will pick up the income, the deduction, the losses, the credit, and report it on their personal taxes. And then once the shareholders report such income, deductions, credit, and losses on their personal taxes, they get to pay taxes based on their personal income tax rate or personal tax bracket. Okay, so once a corporation elects to be treated as an S-Corp, it avoids double taxation, and the corporate entity itself is not taxed because of the S-Corp status. All right, so because S-Corps provide so many benefits, and one of the benefits being the flow through taxation and avoiding the double taxes, the IRS has set down some stringent, qualification criteria that one needs to have to be able to qualify for S corporation status. Okay, so I'm going to tell you some of this qualification criteria. So first of all, the corporation that wants to elect to be an S-Corp must meet all of the following things that I'm going to be saying. Okay, it must be a domestic corporation. And when we say a domestic corporation, it's not necessary that it's just, a corporation that is formed at the state level like an Inc. But it could also be an LLC that has elected to be treated as an S-Corp. An LLC elects S-Corp status by using Form 2553. Okay. Now, the second criteria, remember, to be an S-Corp, you need to meet all of these criteria that I'm mentioning. If you fail one of them, you cannot be an S-Corp. Okay, so we've talked about it being a domestic corporation, either through an Inc. or through an LLC that has filed the S-Corp election. The second criteria is that it must have no more than 100 shareholders. You cannot have more than 100 shareholders. Okay, so you could have the maximum shareholders you could have in an S-Corp should be 100 or less. You must also have only one class of stock. Okay, only one class of stock. You cannot have multiple types of stock. For example, you cannot have common stock and then also have preferred stock. You only need to have common stocks to be able to elect as an S corporation. And then let's go back again and look at the qualification criteria. Number one, it must be a domestic corporation. It must have no more than 100 shareholders, and it must have only one class of stock. And then the final one that we need to review is it must have only allowable shareholders. So in the next slide, we're going to talk about shareholders that are allowed to own S corporation shares and those that are not allowed. Okay. So who are those ineligible S corporation shareholders? Or to put it differently, who are those that are barred or stopped from having ownership interest in an S corporation? Now, number one is partnership. A partnership cannot be permitted to hold shares in an S corporation. Another corporation cannot be a shareholder in another S corp. Okay, so you cannot have a corporation that owns an ownership interest or shareholding interest in another S corp. It cannot happen. A non-resident alien, which is the purpose of our discussion or our presentation today, is also strictly prohibited from owning S-Corp's, shares. And then you talk about the CRUTs and the CRATs, those charitable trusts. So the CRUTs is the charitable remainder unit trust, and then the CRATs are the charitable remainder annuity trust. And then the final one are financial institutions, so banks that utilizes the reserve method of accounting, and insurance companies are also not eligible to be owners of an S-Corp. All right, so that brings me to the distinction between a resident alien and a non-resident alien. Now, a lot of the time I get questions like, can a foreigner or a foreign person own an S-corporation? And the question is, it depends, okay? Some foreigners are resident aliens, some foreigners are not, are considered as non-resident aliens. So let's say a foreign person. Now, a foreign person can be an entity or a person, but in this case, let's just focus on persons who are foreign persons, okay, like an individual. Within the group of foreign persons, you have two categories in the US. You have the resident aliens and the non-resident aliens, okay? Now, it is important that you understand the distinction between resident aliens and non-resident aliens, because resident aliens can have ownership interest in an S-Corp. Non-resident aliens cannot. Okay. Now, who is a non-resident alien? Now, before we understand who a non-resident alien is, we first need to understand who a resident alien is. So, resident aliens are those that are lawful permanent residents, those that entered here on green card, okay, those permanent residents, and then those that has passes the substantial present test. So individuals who enter into the US, okay, it does not matter what method they used to enter into the US, whether they entered legally or illegally, and as long as they stay for the statutory period, usually it's 183 days within a 3-year span, and they pass the substantial present test, they become US resident aliens. It does not matter whether they entered this country legally or illegally, okay? There are some exceptions, such as people, like diplomats and F1 visa holders and international students. There's some exceptions there, but generally, when a person enters into this country and they spend a certain amount of days in the US, usually which is 183 days within that 3-year span, they become US resident aliens because of their substantial presence in the US. And then the last one is those that have opted to be treated as a resident by making their first year election in the US. Okay, so these are the 3 group of people that are considered to be resident alien, and if you fall into this 3 group of people, you can be an owner. You can be an owner of an S corporation. If you do not fall within this 3 group of people, then you are a non-resident alien. Okay, now we also need to talk about US citizens. Now, we know US citizens get whatever they want, okay? As long, if they are citizens, they get whatever they want. So there's a difference between a US citizen and a resident alien, okay? So US citizens and resident aliens can have ownership interest in an S corporation. Again, non-resident aliens cannot. So you look into the definition of resident alien, and if none of those 3 factors that I've talked about does not apply to you, and you're not a citizen, then you are a non-resident alien, and you cannot have ownership in an S corporation. So what are the critical impact of non-resident alien having ownership in an S corporation? So because of the prohibition on NRA or non-resident alien ownership, whenever a non-resident acquire shares or obtain shares in an S corporation, because it is not permissible under the current US tax laws, the moment the non-resident becomes a shareholder, the S corporation instantly loses its S election status. So basically, by having a non-resident alien enter into your S corporation as an owner, you blew up the election. Okay, so the S corporation special tax status is terminated the very day that person acquired the shares or was admitted into the corporation as an owner. Okay, so the non-resident ownership terminates the S election, and that causes the entity to convert or revert back to a C-Corp by status. This could lead to substantial administrative burdens, and it could also be contrary to what the company's strategic objectives are. Okay, so if you are a group of owners in an S corporation, you always need to be careful of the status or the residency status of the people you admit into your corporation, because if you happen to have a non-resident alien as an owner or a shareholder in your corporation, in your S-Corp, there's a lot of bad things happens. Maybe some of them are intended and some of them may not be intended. Now, we're not saying that a non-resident alien cannot have any ownership in a U.S. entity. We know that non-resident aliens or foreign persons can own ownership interest in an LLC. They can be members of a partnership. They can own shares in an U.S. corporation. The only thing they cannot do is have ownership in an S corporation. So that distinction needs to be cleared out. So there are three ways in which S election can be terminated. Okay, the first termination method is revocation by shareholders. This is where the shareholders who holds over half of the corporation shares, more than 50%, they come together, they consent to revoke the S election, and you can find this in section 1362D1. Okay, the second method is when the corporation ceases to be a small business corporation. Now, we talked about the various factors that will cause an entity or that qualifies an entity to be a small business or an S corporation. And those are the factors that I mentioned earlier on. It must be a domestic corporation. It must have only one class of stock. It must have no more than 100 shareholders. That means that it must have 100 shareholders or less. And then the main basis of this presentation is that we are talking about allowable shareholders. It must have allowable shareholders, and we know that non-resident aliens cannot be allowed into an S corporation. So the moment you allow a non-resident alien into a corporation, then you fall under termination method 2, which means that you've caused the company to cease being a small corporation. You basically blew it up. And so it's no longer an S corporation, and it reverts back to a corporation. So you find this in section 1362D2. Okay, so that this happens when the corporation does not meet the criteria of a small business, and we've mentioned all those criteria. Now there is the third termination method, which is excessive passive income. If the passive investment income of the S corporation exceed 25% of gross receipt for 3 consecutive years, okay, with accumulated earnings, the election is terminated. Okay, so this is also another complicated area. There's a lot in this termination method too, but thank God it's not the focus of this video, and we're only focusing on termination method number 2, which is the fact that allowing a non-resident alien into your S-Corp causes the S-Corp to stop being an S-Corp. Okay, and so that's what we are focusing on now. So one of the biggest questions I get asked is, okay, well, we screwed up. We allowed a non-resident alien to become an owner of or a shareholder of an S-Corp. But can you tell me, how will the IRS know about it? Okay, so that's a good question. Now, by default, allowing a non-resident alien to be an owner of an S-Corp means that you've broken the law. Okay, so the IRS doesn't even have to know about it. If you've broken the law, then you need to follow what the law says. Okay, so there's an immediate termination trigger. The fact that there's a non-resident alien in your S-Corp triggers an immediate termination. Okay, and the termination is automatic. So when you look into section 1362D2, it talks about how the terminations happens. Okay, now how is the IRS going to find out? to be honest, the IRS may not immediately know about the ineligible shareholder, or may not even know about the fact that you have a non-resident alien, but they will find out. They will eventually discover it through, for example, if you get audited or you file a corporate tax returns. Usually when you file a S-Corp returns, we want to know who all the shareholders are. We want to know, the shareholders tax ID, their country of residence, and all of that. So through those filings, the IRS may get to know about these things, or you may get audited and then they can figure it out. Okay. Now, the S-Corp becomes a C corporation. Okay, so it now, instead of it being a flow-through entity, it now becomes an opaque entity, which is taxed, which is also subject to the double taxation regime because you've admitted or you've caused a non-resident alien to have ownership shares in the S-Corp. So failure to notify the IRS in a timely manner can lead to severe penalties, including taxes, interest, and then interest charges. Okay, now, because it's difficult for the IRS to get to know about, what each of you are doing within your S-Corps, the IRS will require you to notify them. Okay, so you're required to submit a timely notice of termination to the IRS, and this is going to allow the IRS to update their system. On your screen, you can see that we've redacted some information on it, but these are some samples of notice of termination that we've sent. Revocation by shareholders can be found in section 1362D1, whereas termination can be found in section 1362D2. So revocation is on D1 and then termination is on D2. So you have to know which section of the code you're using to notify the IRS. Otherwise, you're going to get some delay and some pushback here and there. Okay, so process of notifying the IRS of S corporation termination date, termination due to ineligible shareholder, and I'm sharing this sample again. Now, your legal basis for termination when a non-resident joins an S-Corp should be found in Code Section 1362D2. Okay, this mandates the termination of S corporation status once there's a violation of the eligibility criteria, and that's what terminates it. Okay, now the notice preparation, you need to prepare a detailed notice stating the termination of the S corporation, and you must state this code section that you're using. So in this case, a non-resident is admitted into the S corporation, so we're using section 1362D2 of the Internal Revenue Code. Okay, you also, in your notice, you must clearly state the effective date of the termination, and that effective date is going to be the date the ineligible shareholder acquired shares or became the owner of the S-Corp. Okay, now there are other content in the notice that you need to make notice of. For example, you need to include the corporation's name, the address, the employer identification number, and then you need to submit the termination notice to the address at the correct address for processing at the IRS, one of the IRS campuses. Include the total number of shares issued and outstanding at the time of the termination. And then also, last but not the least, make sure you file a final Form 1120S. That indicates that there's the end of the tax period as the exact date the S corporation election was terminated. Okay, so make sure Form 8822 is necessary. It's all based on the type of entity type you have. Okay, so if it was a domestic corporation that elected to be treated as a corporation, as an S-Corp, you should not be filing Form 8832, okay, after the S-Corp terminates, because those will revert automatically back to the original C corporation. Plus, a domestic corporation is not an eligible entity to elect to be treated in any other form. Okay, a domestic corporation, other than it electing to be treated as an S-Corp, cannot elect to be treated back to being a corporation. That's why it reverts back to a corporation. Okay, so once you remove the S-Corp umbrella, it reverts back to being a corporation. Okay, so there's no need to send a 8832 after there's a termination, as long as the corporation was formed as a domestic corporation. Now, the second one is LLCs that have an S corporation election. Now, initially, when an LLC elects to be an S corporation, it goes through some process that you don't actually notice, but it is deemed to have a corporate status through that form 2553. Okay, so first there was when I first started preparing taxes, I hear a lot of misinformation that, well, you want to elect for S-Corp status, you first need to use 8832, and then after you finish 8832, then you go and use 2553. But that all turns out to be wrong, because with the S corporations with the LLC, when an LLC electing to be treated as an S corporation, it only needs to use 2553, and through that 2553, the LLC is doing two things. First, the LLC is electing to be treated as a corporation, and secondly, it is also electing to be treated as an S-Corp. So the S-Corp being the final determination. Okay, so post termination, once the S-Corp, once you have an LLC with an S-Corp election and there's a termination, it reverts back to a corporation, and you don't need to file Form 8832, right? But then you only use with LLC, you only need to use 8832 when you want to reclassify, the entity, whether you, after the termination, if you don't want it to continue to be a corporation, then you use the 8832 to reclassify it as a disregarded entity or a partnership. Okay. Other than that, once there's a termination and you've notified the IRS, you don't need to use 8832. So these are the various scenarios. So the question as to whether to use 8832 depends on the type of entity that it is. If it's a domestic corporation, it's already a domestic corporation is not an ineligible entity to elect to be treated again as a corporation. No, it's already a corporation, so you shouldn't be doing anything. An LLC with an S status, like I said, it was initially deemed to be a corporate through Form 2553, and so once it's terminated, the S-Corp election is terminated, it goes back to its deemed election as a corporate. And it's, you're not required to file Form 8832 unless you want it to be treated in a different way, like a disregarded entity or a partnership. Okay. All right. So what happens, or let's basically focus on understanding S corporation election termination and re-election restrictions. Now, once there's a termination or a revocation, there are some restrictions. Okay. So because the S corporation enjoys certain tax benefit, they must, follow certain strict guidelines of ownership criteria, which we've talked about. A termination of an S-Corp status can occur if ownership rules are violated, which we've talked about. Again, we talked about the fact that a partnership cannot own an S-Corp. Another corporation cannot own shares in another S-Corp. Certain banking that use reserve method and certain insurance companies cannot be shareholders of an S-Corp. And then non-resident aliens cannot be shareholders of an S-Corp. And then we talk about the CRUTs and the CRATs, okay, the charitable remainder trusts. They cannot be owners of an S-Corp. So if anytime you have these people or these entities being owners of an S-Corp, and that means that you have a termination event. Okay, now what happens? Can you do another re-election to be treated as an S-Corp once there's a termination? Now, according to Section 1362G of the Internal Revenue Code, if an S-Corp status is terminated, the corporation cannot elect S-Corp status again for 5 years. So the corporation must wait for 5 years before it elects again to be treated as an S-Corp. Okay. Now, this 5-year look-back period begins after the first taxable year where the termination was effective. Okay, and then let's also go back to, in every rules, we talked about these general rules, but there are some exceptions to the general rules. That means that if you want to, according to Section Treasury Regulation 1.1362-5A, if you do not want to wait for the first for 5 years before you do another election, then you can only do that with explicit consent from the commissioner. Okay, so you have to seek consent from the IRS commissioner that maybe you have some certain reasonable circumstances and certain issues. That's why you're requesting that the restriction do not apply to you, but you need to get confirmation from the commissioner. All right, otherwise you are barred for 5 years. Okay, so it is what it is. If your S-Corp goes through termination, on your screen is the letter that you're going to receive from the IRS, and it tells you the restrictions that you're going to have for re-election and all of that. And so take a look at it and then understand what it's saying. But then again, this question has been asked a lot, and I hope my presentation helps out for those that wants to purchase. If you're non-resident alien and you want to purchase stock ownership in S-Corp, it's much better you understand the implications and the consequences. So I hope this video helps you guys out, and if it does, please like, share, subscribe, and I'll see you on another video. Thank you. Bye.